Alright traders, a very good evening to you all. This is Aviral from the Tradepsyche and I welcome you all to the post-market analysis, outlook and expectations of the market for next week. Alright, so welcome back to the weekly analysis videos, and first of all, sorry for being away to whoever the viewers are. Right, I was on a break and I had went to I had some travel plans, so that was the reason why I could not make videos. Right, and I know some of my viewers are there who wait for my videos, so apologies to you guys for not being there for, I think, roughly 10 days, 10 sessions for the videos. So we'll be starting back the recording the videos, and the videos will come daily now. Right, so in this video, we'll, as you guys all know the drill, we'll be discussing the markets for the next week, what is going on in the international markets, what is going on in the oil market. So it's going to be a little slightly long video, so watch it with patience. Right, we'll discuss the charts, and we'll also discuss that the fall which is going, till what point now it can go, and till what point we think that which level the markets can see a turnaround. Right, so watch it with time, and try to learn the price action points which I'm gonna tell you. Right, so let's start the discussion. I'll be leaving the link to my Telegram group in the description box below. Do check it out. If you are a trader, whether it's intraday, positional swing, we are giving a guidance to traders that what to trade, how to trade, and when to trade. Right, we are sharing our views on the markets, and they are working perfectly. Right, so let's first discuss from global perspective that are there any positive or negative news flows. Then we'll straight go to the technical analysis, the charts. Right, so I think as of now, the futures, the weekend futures which we are looking at, the markets are looking at a 0.5% gap down as of now, and the oil is looking roughly around 2%. So on this weekend also, nothing de-escalation has happened. Rather, only escalation has happened because two of the US F-15E pilots, they ejected because their fighter jet crashed. It got hit by the Iranian missiles, and they were in the Iranian territory, but luckily the evacuation of those two American pilots, as quoted by the verified news sources, it has been done. And now Trump has given the warning that 48 hours timeline. If you guys remember that Trump gave a 48-hour deadline to Iran, that open the Strait of Hormuz or we are gonna obliterate you. That 48 hours timeline, that 48 hours duration will get over by Monday morning. Right, Monday night, I think so. Monday night, I think so. According to Indian time, Monday night it will get over. So Monday will be a very crucial day, because just a few moments back, few hours back, Trump has given another warning to Iran that either open Strait of Hormuz or we are gonna bomb you like hell. So all in all, if you want to conclude that there is no sign of any de-escalation, right? But keeping this point in mind, the Friday markets were closed. Thursday we saw a 400 point down. We'll discuss that on the chart, but as of now there is no positive news coming from the international market. Even from the domestic market, there is no positive news. The IIP data, the PMI data of India is deteriorating only. So there is still no positivity from fundamental perspective or from news perspective for our markets. So that's why I'm telling you that, because currently the markets are moving in a way in which the markets are not factoring the technicals, they are factoring just the news. Right, so you have to be aware of the news, you have to stay aware of the sentiment, that what sentiment is going on in the international markets. Right, so let's start with the technical analysis. And if you guys remember the last week analysis video we did, the last thumbnail, if you guys go and see, I'll make you see. So this is my channel, right? And the last video which I shot was 2 weeks ago, and I mentioned in the thumbnail that pause is expected. Right, now if you go to Nifty's weekly chart, this video was shot 2 weeks back, right? And post that, like 2 weeks back, I think this was the candle where we mentioned that yes, essentially we can see a pause in the markets because we have been falling continuously from 3 weeks, and two perfect driven dojis have been formed. So it's not a fluke that these two continuous dojis get formed in the market. These are driven by algorithm. And the current weekly close is, I think, a decent, because on Friday, if you guys see, from bottom from 20 to 180, we saw a massive recovery of almost 600 points. So that is not a small recovery. And if you guys see from past, how many sessions we are in a, from like only 1,000 point range, 23,800 to 22,400, and I think 22,200. So 1,500 point range is there. But yes, the markets have essentially taken a pause because the markets are moving in a zigzag pattern. And if you see, the low of 23rd of March is equals to the high of, I think, uh, 4th April or whatever the day on Thursday was. So yes, as we anticipated that a pause will come, a pause has definitely come in the market. And why we mention a pause is, the first reason was, understand this thing. Dekho, see from your perspective that markets were continuously falling and markets were at a very good support. 22,000 is a psychological round number level. So definitely some support is expected there. Additionally, if you see this level, 22,000, first point is psychological level. Second point is, the markets, they spent a huge time at this point of time. So it is a good base, and it is only being, after a breakout, it is only being hit second time at this point of time. So we always know that a level, for that level to get weak, that level has to be hit at least more than 3 to 4 times. Then and only it gets broken down, it gets retested, and then the markets fall further. But in this scenario, we have only touched this level, the level of 22,000, only twice after breaking out. So there is a possibility that yes, the markets might revive from here to certain extent if the sentiment improves. But be very cautious, because this is a very very big support. If this breaks down, if this level breaks down, this pure support zone, the next support zone is only and only 20,000. There is no stop between 22,000 and 20,000. No stop, literally no stop. The first stop will be 21,281. That is the June election low. So that can be also good support. So from 22,700 currently, if 22,000 breaks down any point of time next week, we'll discuss on the weekly time frame. But I'm just giving you a slight brief that what we can expect in the markets, right? So let's start the complete in-depth analysis of the charts. All right. Now, as we anticipated, a 2 weeks pause came. We went down, but somebody bought a huge quantity here in the markets, right? So the weekly analysis is not that much bearish, because we haven't closed below the prior weekly low. And the candlestick is also doji candlestick, but it's a green candlestick. So the markets are still in negative territory. But yes, as we mentioned, I think in our Telegram group also, we mentioned that this is not the good time to short the markets. See, I have come to hourly time frame. A good time to short the markets is at every retrace till 50 EMA hourly, 50 or 100 EMA, it is a good point to short. So the worst point to short the markets is when the price on the hourly time frame is below 5 EMA. So just look out for yourself. Whenever the prices are below 5 EMA on hourly time frame, they always retrace back to 50 EMA, right? So if you want to play for sell on rise, don't try to short when the prices are below 5 EMA. Wait for a pullback. Let the prices go till 50 or 100 EMA. Short at that point. Getting my point? So that's how you trade the sell on rise. Let the markets rise so that you can sell it. Correct? Now, let's go back to monthly time frame also, because we didn't do monthly analysis for April. So let us do a monthly analysis also, right? So I'll try to wrap this video under 30 minutes. So bear with me, and I don't want your much of the time to be consumed in understanding what we can expect from the markets for the next week. Right now, In our Telegram group, we discussed that the bare minimum thing which we can expect from the markets is to stay in this range. This is the prior monthly range. From my perspective, unless and until, because this is a very huge monthly range, unless and until we cross these two levels, either on the downside, either on the upside, we won't see any, ultra trending move. So for positional traders, the bullish entries will only come above 25,000. For positional bearish traders, now if you look at the markets from monthly perspective, it's a classic M pattern. Even if I invert this chart, right, if you guys see this market, the markets are looking very much good for this kind of move. Remember this, that this is an inverted chart of Nifty. It means that if it goes red, it means we can fall further. So you know how much I love the W double base pattern, right? So where is the neckline? And I have always told you that whenever the markets bottom out, remember this is an inverted chart. So when the markets bottom out, technically, after a strong bearish rally, the first pullback is the fake one. The second pullback might be a good one, but you have to wait for this neckline. This neckline is exactly coming at this point. This is the level. This is what level? 21,600. So still the markets have some space for on the downside, but if 21,600 is not safe, I think, my dear friends, first level will be 18,000 and second level will be 16,000. Let me invert it back, and now can you see this? What is the resembling? And this is a very bookish pattern, but from monthly perspective, we should not close a daily or weekly candlestick below 22,200. That's why the market was saved, because if it all, the last week's closing would have happened below 22,200 or 22,270, then I think the algorithms would have heavily dumped the market. That's why somebody came and somebody deliberately bought the market. Understand the markets, understand the price, understand what is happening in the markets, right? So I'll bring back my old levels. So if the markets plunge below, currently we are at 22,700. If we start to go below 22,200, then I think the first level which we can see is 21,990. The second level which we can see is 21,700. Post that we can see 21,300 and 21,000. But essentially, if you see this much, this candlestick, big red candlestick, generally after a big red candlestick like this, let's suppose we are seeing a candlestick like this on monthly time frame, technically it might be possible that we might see a doji on monthly as well for a pause, right? Or we might, if you see this candle, this was a huge red candle similar to this, we saw one doji, and then we saw a inverted hammer, and then post that we fell, right? So at monthly level, there are two possibilities. Either this monthly candle will be a full recovery, or either it will be a doji, right? So when we talk about doji, right, so the first month markets can see a good rise like this, and then finally at the end of the month markets can retrace back the rise and close off doji. So this is also a good probability. So we will drill down on the shorter time frame, and we will see that what will be some swing opportunities, but any positional bullish opportunities now in the market. By positional, I mean for 2 months, 3 months, 6 months, will only and only come above 25,000 for the level of 26,000, 26,350, and above 26,350, it will be an open ground for 27,000 and 28,000. But crossing 25,000, it's a very, very difficult task in the current sentiment. But if at all we break below prior monthly low, which is 22,280, then I think we will be heading for 22,000. Below 22,000, the first level I see is 21,000, and below 21,000, I think 19,000 is a good support, right? So from monthly perspective, things are not at all positive, because still we are below the prior monthly high. And to deal with this, what if you guys are a regular viewer of my videos, what I do is I use the 50% retracement rule of candlestick, right? So 50% of this monthly red candlestick comes at 23,700. So even if we achieve 23,700, we closed a daily candlestick or a weekly candlestick about 23,700. So then it is a high probability that we might do 25,000. But unless and until 50% or more than it gets retraced on the upside from monthly perspective, we cannot expect any good bullishness in the market. Correct. Let's go to weekly time frame. Weekly time frame, we already discussed that markets have given a sign of pause, because why the market should not give you a pause? We are at weekly 200 EMA. From daily perspective, we are at we are way below uh, the 200 EMA of the market, and whenever the markets have sustained for a longer period of time below the 200 EMA, it always gives you a pullback. So that's why we are back to back saying that this is not a good point to short, because any day if the war gets over, you will see a good pullback in the market, right? Because the whole pressure is because of the war, correct? So let's go to weekly and let's mark the weekly highs and lows, because we all know that how much important weekly high and lows are. Now from weekly perspective, the price action is still looking slightly positive, but any good short, I would not personally recommend you to short the market at this zone, but like 22,700 and 22,200, don't short the market here. If at all 22,200 breaks down and we close a candlestick, see, the closing is very important, because what might happen is we might go below this level, but again a strong buying might come at the end of the market. So closing is very important. If the markets are closing and the markets are not giving you any pullback, then I think we can short the market below 22,200 for 22,000 and 21,000. That will be a very good trade. But from past 3 weeks, we are seeing whenever the markets are going down, we are seeing good buying. This was a doji, means a pause, and this is slight bullishness in the market. So all we need for a good bullishness in the market, see, we all know that this is not a good time to short the markets, because the risk to reward is not good. If you want to short the market on a swing basis, wait for a pullback like this, then short like this, or wait for a bigger pullback like this, then short for a bigger move. But yes, that does not mean that if the markets are breaking crucial levels on the downside, you don't short the market. Yes, of course, because the risk to reward is not in favor of bears, so the risk will be high in shorting. But if the markets are breaking 22,000, 22,200, you have to short it, right? 1 second, let me. Alright, so from weekly perspective, things are looking slightly stable, because we saw a very good 600 650 point move on Thursday, last second session, and that was also most probably that was also expiry driven, because it was Sensex expiry, right? We'll also look at GIF Nifty, that what levels GIF Nifty is showing, and how we can open on Monday, tomorrow, right? But the crucial level is 23,000. See, 22,950 is prior weekly high, so keep a crucial level at 23,000. 23,000 level is the prior weekly high. Any swing bullish opportunities, see, the markets, if the markets try to cross 23,000 and they sustain on daily basis, the first level which you can expect is 23,500. Above 23,500 you can expect 23,660, which is the 50% weekly retracement. Above 23,660 or 700, you can expect 23,800 and essentially 24,000. But any swing opportunity, I'll explain you on daily time frame for intraday basis and hourly time frame on intraday basis. But if I am a sane trader, if I am a good trader, I would not look for long opportunities unless we close daily above 23,000. See, I'm not interested in 300 points rise from 22,700 to 23,000. I'm interested in points, catching the points from 23,000 till 24,000, because that is a more safe trade, that is a more risk less risk trade, because we know that the markets have sustained on daily basis on a very above a very good psychological level, which is 23,000, right? So the prior weekly low is roughly 22,000, 22,200, right? So if the markets on the next week, because currently we are at 22,700, let's see that how much gap down we are expecting in the markets. Currently we are at 22,540. So the markets, they closed, I think, let me check. We closed on, I think, roughly, if you I see, let me check the calendar. Today is what, 5th, right? So we closed on Thursday 2nd, right? 3rd was holiday, so we closed on 2nd. So this was second market, 16. This was the closing point of the market, Thursday, right? 1 second, I think I deleted some studies. So the level is 22,700. Currently we are at 22,500. So still, I think 200 points gap down. We are looking at a 200 points gap down. Correct? So if on Monday, that is tomorrow, we break below 22,200 and we sustain on, so this is weekly time frame, right? So any daily closing below 22,200 can be devastating for the market, and any daily closing above 23,000 can be very bullish for the markets for the short term, I'm saying, right? So if you are a long term trader, which is like swing or positional, skip this range. Skip the range from 22,200 to 23,800 point range. Skip it. Trade for only good bullish opportunities above 23,000. Trade for only good bearish opportunities below 22,200. That, and both of them on daily closing basis. Wait for the closing. Wait for the signal to come. Don't rush in the markets. Correct? Let's go on daily time frame. On daily time frame, the scene looks pretty much different, because if you see, we went till 22,200, but the markets were saved by someone. So prior daily high is 22,780. So above 22,780, I think we might see some relaxation till 23,800, 890 or 23,900. But frankly, I'll tell you, I would be more interested in trading like above this neckline, these two necklines, which is the level of 22,700 or 23,000. That's it. This neckline, or there are many necklines, but do not trade in the range of 23,000 to 22,700. Please skip this range. Getting my point? So if at all we remove all the levels from daily perspective, we have tried to hit 5 daily EMA multiple times. If at all we sustain any daily candlestick closing above 5 EMA, the prime target becomes 20 DMA. And if you see the pattern, 1 2 3 green candlestick, fall, 1 2 3 green candlestick, fall. And if you guys remember, we even discussed at this point of time that the same pattern is repeating. 3 green candlestick, then a gap down. Same thing happened here. 3 green candlestick, Thursday and Friday end. Right? So technically, I think so. This was Thursday, Wednesday. Because last week I think there were 2 holidays, so there's no point discussing that much, right? But important level is 23,000. That's all you have to see for bullish entries. On the downside, 22,200 is also an important level for bears. From hourly perspective, the markets look slightly oversold. Yes. I think the strategy should be clear to you. We'll talk about because, but on a brief basis, right? Even though markets, if at all they fall below 22,200, I will short the market, but I will short the market with tight stop loss, because the markets are oversold at any point of time. If a good news comes, short covering will definitely, because see now I have started looking the markets from a different perspective. I don't see the markets that somebody manually is trading the market. The algorithms, they trade the market. And if the algorithms, they sense some positive news from the market or from the news or from international markets, they deliberately go and they cover their shorts, and that's why short covering happen in the market, right? So it's an algorithm driven market, so you have to, blend into that. So if a positive news comes, then I think you have to either sit out if you are a bearish trader, or if you are a bullish trader, play that move, right? So for bullish entries, I've already told you about 23,000, because don't don't be in a FOMO that you'll miss any good number of points here. Take a safe trade of 23,000 only for bullish entries, right? Now, from the opening basis, if at all we open a big gap down, because since this was a expiry driven rally, it has a capability to get retraced. So we might be on Monday, we might be opening 200 points gap down near 22,500. 22,500 is a decent, I'll not say that it's a big psychological level, but it's a decent psychological level. So on Monday, if 22,500 is getting breakdown, there is a high probability that we might is getting broken down. 22,500 is getting broken down and sustained on early time frame. That is the most important thing. Correct? So if it is getting broken down and sustained, then I think 22,280 can come. Below 22,280, wait for 22,200 to break down and sustain. If that happens, then I think we are poised for 22,000 and 21,000 in the market. And if at all we open flat or we open gap up, wait for 23,000 to get sustained. That's it. If you see Nifty getting sustained out of 23,000, take a small bullish trade and keep on adding positions to it on every 100-point rise. See how do you capture 1,000 points in the market. Why? Because we discussed that above 23,000 there is a clear cut trade till 24,000. Getting my point? I hope you are understanding my point, right? So we have discussed Nifty. Let's discuss Bank Nifty. What Bank Nifty is trying to do. On monthly perspective, we all know that yes, Bank Nifty was much more bearish, but exactly the Bank Nifty took exactly support from 50,000. So if you are finding an answer that why did support came in Nifty, that was because of Bank Nifty. Bank Nifty traveled 10,000 freaking points. It is almost in a single month of March that we corrected, and it is a mini crash, I would say, because this much candlestick, if you see, happened I think in COVID. If you see the pattern, this happened last in COVID, where we fell from 29,000 to 16,000. That is 15,000 points. Still, I think we are here for roughly 10,000 points. So it's a decent correction here, right? So you might see a big pause in the market like this, in Bank Nifty at least, because we know that Bank Nifty took a very huge pause. And if you are a regular viewer, you might remember that we discussed that from so many months Bank Nifty is in a very skewed range from of 2,000 points, from 1 2 3 4. So at some point of time this range had to be taken out, and now I think most probably Bank Nifty can give you a good pause in the market, just like this. But if at all we start to go below 50,000, then I think the first level would be, from my perspective, would be 49,200, and below 49,200 it will be 47,700. But we need a daily closing below 50,000. If we see a daily or weekly closing below 50,000, then I think markets are gonna go more weak. I think roughly 55,000 is the center point of this bearish candlestick. If at all 55,000 is not getting crossed, don't look for positional what do you say, positional bullish opportunities in Bank Nifty, right? Above 55,000 you can essentially see 58,000 and 60,000. 50, yes, I think above, because that is the 50% retracement. If we see a weekly closing above 55,000, then I think markets might go for a good short covering. And let me tell you one more thing. If the war gets over in April, you might also see a candlestick like this, right? And if this candlestick happens, it is a very because this whole down move was because of a war. So if a war has caused a downfall, and if the war gets over, we might also, have a probability of seeing a recovery. But this whole recovery on the monthly perspective will come step by step. It will not come in a one shot. So we will discuss on the shorter time frame that how it can come. So we will go on weekly time frame, and from weekly time frame, if you see, there is a kind of pause in Bank Nifty also. Although the closing is coming below prior weekly lows, but yes, there is a recovery coming in the second part of the week. So the crucial level for Bank Nifty is on the downside is 50,000. Below 50,000, any daily closing comes, aim for 49,250 or 48 and 48,800. The upper point is 52,000. So skip the range of 50,000 and 52,000 for next week. Don't trade in this range. If you want to trade, trade the strangles. Short a call above 52,000 and short a put below 52,000. Expect that the markets won't go beyond this range, right? And if the market starts to go below above 52,000 after a daily closing, then you can aim for 52,500, and above 52,500 you can essentially see 54,000. Getting my point? On daily perspective, I think the price action is very much similar to Nifty, and whatever we have discussed in Nifty will also apply to it. Wait for a daily closing above 52,000. That's all I'm gonna say. Don't trade 50,000 to 52,000. Above 52,000, you can essentially see 52,500 and 54,000. Right? Getting my point? Same concept on hourly time frame. Big gap up, big gap down. If at all markets, please don't. That's what I'm saying. Please don't trade at least this range. Don't trade it. If you are a Bank Nifty trader, don't trade it. Getting my point? From overall perspective, markets are still purely sell on rise. When the markets see, I'll go back to the Nifty 50 time frame. Essentially, if you see, we are in this trend line, kind of this trend line. Even if you don't put this trend line, if you want to see this trend line, you can see this trend line. So, because if you see the markets are moving in a price action like this, right? So when this sell on rise will get over, when this resistive trend line will start to get broken on the upside, and the markets will move in a higher lows and higher highs part, right? When you will see a price action of like this, we will trade a bullish move. Getting my point? So as of now also, we are also in a sell on rise mode. So unless and until we see any weekly closing above prior weekly high, because how many weeks have gone by? 1, 2, 3, 4, 5, 6 weeks. For 6 weeks, we have not closed our prior weekly high. This was the last weekly closing of prior weekly high. So I think 8 weeks you can count. So any weekly closing of prior weekly high currently, like any weekly close above 23,000, should be good for the market for coming 2 to 3 weeks. Okay, all right. And same goes for Bank Nifty as well, right? So prior weekly high is what? 52,000. Any weekly close above 52,000, I think we should be good. Rest we'll keep discussing consecutively on Monday, Tuesday, Wednesday what is happening in the markets. But yes, this is the case. Getting my point? Let's discuss the other sectors also. IT. If you guys remember, we were discussing that yes, IT has started to form a base, and from past 3 weeks, if you guys remember, that Nifty IT has started to go strong, and this is the first week. Let me take you to the monthly time frame. The monthly high, the prior monthly high is 30,600. Prior weekly high is 30,600. So 30,600, 30,800 is a very, very crucial zone in Nifty IT. And if you see, we have seen a prior weekly close over prior weekly high. So expect next candlesticks in Nifty IT to be like this. And I am damn sure that we can expect Nifty IT to bottom out very soon. Because there is nothing more to expect negative. Every negative thing in Nifty IT has been factored, whether it is bad earnings, whether it is AI. I think it is a very cheap sector from my perspective. It's not a buy sell recommendation, it's my view. because the charts are telling this, the price is telling me this. Getting my point? So I think buy on dips for Nifty IT because it has essentially closed above prior weekly high. Nifty Auto, let me go to weekly monthly time frame. Nifty Auto I think can be weak, but Nifty Auto is weak. Maintain a pause on Nifty Auto because we have not closed below prior weekly low. But if at all Nifty Auto falls below 23,500, sell Nifty Auto for 22,400 and 20,000. That's it. Nifty Metal, we were anticipating that yes, a top can form. A top has formed here, and again in Nifty Metal also we have closed our prior weekly high. So buy on dips for Nifty Metal. Small cap. Now, let me tell you one thing. Understand this from this perspective. And I'm only going to say this one statement, that this is not a good bearish price action. These are weak bearish candlestick from weekly perspective. So what this is telling me, that broader markets, they did not see a good fall. While Nifty saw good fall because of banking, the banking was the culprit, but the broader markets, they have sustained the fall. From past 2 weeks, can you see 2 green dojis? Yes, it means that yes, relatively the broader markets are doing very good. And this is weak bearish price action. I have already told you that weak bearish candlestick like this, they can fall multiple number of times, but there is a high probability that one weak candlestick can retrace this. Good bearish candlesticks are like these candlesticks. These are weak bearish candlestick. I'm not saying weak candlestick, I'm saying weak bearish candlestick, means these candlesticks are fake bearishness. Getting my point? So this is a big sign from the broader markets, from the price perspective, that yes, the broader markets are holding the markets. It's the banking which is falling. Nifty mid cap, same scenario. These are weak bearish candlestick. Weak bearish means these are dojis. These are not strong bearish candlestick. From past 3 weeks, we have been forming dojis. It means there is a confusion in the market, means the mid cap is not getting sold. Means that there is a chance that we might reverse on the upside. See, if the markets want to fall, right, they will definitely form weekly candlestick like this. But what is the formation of weekly candlestick? Dojis. It means confusion. And I think the broader markets are not falling as much as the Nifty is falling. Getting my point? So from overall perspective, small cap and mid cap they don't look that much bearish to me. And if any positive news comes, they will be the first ones to lead the market. Additionally with IT. So if the bullish sectors for me, what I'm targeting is IT, small cap and mid cap. The weakest sector will be Bank Nifty and Auto. Getting my point? Right, let's discuss the open interest data. It is already 38 minutes down. Right. So change in OI for tomorrow's market is equal number of addition of longs and shorts. Rather slightly more number of longs have been added, if you can see. Biggest support, good support has been added at 22,300 and 22,200. Biggest support is at 22,000. Total open interest 22,500 has a decent support. So that's why I'm saying 22,500 is a psychological number level. Below 22,500 you will see 22,300 and 22,000. Right? So the data is not also that much bearish. Bank Nifty, if you want to see, change in OI for Bank Nifty is slightly bearish. 2.2 lakh addition of shorts and only 56,000 addition of longs. So Bank Nifty is seeing a good bearish data, and that's what we talked essentially, right? That Bank Nifty is the weakest sector. From total open OI perspective, I think 52,000 has a good support. are currently at 51,500. Right? So 50,000 is a decent support. Below 52,000, markets have a probability to again go till 51,000 and 50,000. Getting my point? So the data for Nifty is neutral, very much neutral, but the data for Bank Nifty is bearish. So from overall perspective, guys, VIX, and the biggest thing, even after looking at everything, let's discuss VIX slightly. The VIX has formed a negative red candlestick. So I am just waiting for the VIX to melt below the level of, I think, 22 or maybe 21. Below 22, 21, VIX will melt like a candle, a burning candle. And you will see sharp decline in premiums, and especially in put premiums. Right? So from overall perspective, the VIX needs to fall below the level of 22. That will be a good sign for the markets. Additionally, the broader markets, they are not experiencing that kind of bearishness from past 3 weeks, which is a slightly bullish sign for the markets. The pause which we expected, it has come in the markets, and probably the markets might be ready for a slight up move, a slight retrace back. That's what we expect from the markets if a positive news comes. But don't think that the markets are bottoming out from here. We can see a slight move on the upside because the markets are oversold, but we might retrace back till 24,000. We might again see a fall, then we might bottom out big time till June, July, August, like this. Understanding my point? That's it. I think from my perspective, I think I have made the things very much clear to you that what to expect. Keeping every perspective, keeping every sector in mind, I think IT, small cap and mid cap can be good sectors to target if the markets start to recover back. Correct? And banking will be the weakest sector because banking has its own issues. That's out of the scope of this video. But yes, the markets are looking neutral to me. Not that much bearish, but it can become bearish if other negative news comes and crucial levels break down on Nifty. Because if Nifty breaks down 22,000, that selling pressure will also be reflected in small caps and mid caps. So I think after analyzing everything, markets look neutral to me, and we should see a decent bounce off from these levels, or not even, if not even a bounce off, we should see a pause in the markets, but we should not fall further. That's what the data and that's what the price is indicating to me. But keeping aside all the things, the situation is very volatile. That's what the VIX is indicating. Right? The situation is very volatile, and things can quickly escalate and de-escalate within very short period of time. So you have to be very sharp in the markets. You have to be very quick in the markets. Don't stick to a certain view that I have shorted the markets, why the markets are not falling. Because at the VIX, when the VIX is 22, 23, the markets can rapidly move 1,000 points on the upside, and markets can rapidly fall 1,000 points on the downside. So you have to be very sharp, very quick in these markets. When you can stay calm, when you can stay relaxed in the VIX of 13, 14. Getting my point? So I hope you are clear with the perspective that what is going on in the markets, and you know how to deal with the markets next week. If you have liked the analysis, if you have liked how we do the analysis, leave a like, leave a comment, and share the video with your trader friends. Cheers, good evening.